Most investors think they need 10 different indicators and a complicated strategy to make money in the market. Forget all that, you only need one line. Now I know you're thinking that probably sounds way too simple, but this one line shows you what really matters. Where the big money is buying, where the market is fairly valued, and when the market's getting a little overheated. Now, if you've never looked at a chart before, don't worry. A chart is just a picture of price over time. And when you add this one line, it's like turning on Google Maps before you go on a road trip. Now, would you silly bastards travel across the country without any directions? No idea where you are or where to stop for fuel. I mean, you could, but you're probably going to waste time. You're going to get frustrated and you're going to end up completely lost and probably divorced. And now for some reason, this is exactly what most people do when it comes to investing into crypto. They buy just on hype with no roadmap on where to go. Today, I'm going to show you what this line is and how it acts as a map. It tells you when price is cheap, when it's expensive, or it's at fair value. And I'm telling you now, once you understand this, you'll never look at investing the same way ever again. All right, so let me paint you a picture. Maybe this has happened to you before. You see Bitcoin or some altcoin pumping hard. Social media is buzzing. Your mates are telling you to get in. And you feel like the only option is to buy now, or you're going to miss out. So you buy. Now put in the comments what happened next. The day after, the week after, it tanks 20%, 40%, 80%. And suddenly that amazing investment sounds like one big mistake. And now you stress, you're checking your phone every 5 minutes, thinking, should you sell at a loss? That cycle of buying high and panic selling the lows is how most people lose money. I see it all the time. And to be honest, it's not because they're dumb or unlucky. It's because they don't have a reference point to tell them where the market really is. And that's what this one line gives you. Instead of guessing, you get clarity. By the way, if this sounds familiar to you, I've left a link in the description for some free training that my business partner did called Sell the Top webinar. It shows you exactly how to avoid being the last person standing with your bags after the top's gone in. It's completely free, just go check it out. So anyway, Critty, what the fuck is this line you keep talking about? Building suspense, brother. In technical terms, it's called the VWAP, volume weighted average price. Now, in plain words, imagine everyone has bought Bitcoin over time. Some bought $50 worth and some bought millions of dollars worth. The VWAP blends all that volume together and gives you the true average price, giving more weight to the bigger buyers. That's why we call it the market's fair value. Now we take it one step further with the long-term VWAP or LTVWAP. Instead of looking at just 1 day or 1 week, we can stretch it over months or years. And for investors, that's gold because you don't care about every single little wiggle that you see on the chart. You care about whether you're buying above or below on where big money is positioning themselves. Think about it like petrol. If the average petrol station is charging you $2 per litre and then one of the petrol stations down the road is charging $2.50 a litre, you know straight away you're overpaying. And then if you keep driving and find one at $1.70, you know that is good value. And that's what this line does. It helps you see if you're paying above, below, or at average prices. Now here's where it gets better. Along with the main line, we add 2 guardrails. The value area high and the value area low. Think of them like the edges of the fair value area. Most of the time, price moves between those 2 levels. Like guardrails on the road, but please don't fucking drive your car into those guardrails. And when price pushes up towards the value area high, the top guardrail, the market's starting to feel expensive. That's where smart investors might decide to take some profits or at least stop chasing. And when price starts coming down to the bottom guardrail, the value area low, the market's getting cheap compared to the long-term average. That's where patient investors quietly add. The middle line is your compass at fair value. The top and the bottom give you context. So take positions closer to the value area low, be cautious and trim at the value area high, use the center line to stay grounded. So here's a really good example of the range back in 2024. This is Bitcoin. The new year started here. The blue line is your VWAP for the year. The top line is one of your guardrails, the value area high. The bottom line here is your value area low, the bottom guardrail. Now, as you can see through this range, price just wanted to stay in this value area, with the average volume being this blue line here. At the start of the year, there's less data, so they're less relevant, but as the year goes in, they are definitely more crucial. Once we got it back inside this gray area, price just chopped in, right? As you can see right here, price didn't want to leave this area. It's like a magnet. Just picture this like a magnet, this blue line. It come back down, it just chopped around, come back up, perfectly rejected off the top guardrail before coming down and reverting all the way back down to the bottom. Now, if you're an investor of Bitcoin and you've seen price hit this level, you know that is a good time to get involved. You are buying at a much discounted rate than what anybody here did, and this goes over the space of months. Once we come back up, we just chopped around before people decided that they're going to start buying on the VWAP, which is the fair value price, before coming up. First rejection of the top guardrail, and we broke through, come down, and retest, and off we go. So keeping in mind, I said when you get to those top levels, you need to be cautious and think about taking profits, but there's also the opportunity, just like I showed you, where price can break through, use it now as support before it goes up. So when this happens, when you approach these levels, you just got to make sure that you're looking at the slightly lower time frames and seeing how price reacts. Now here's another example. This is on the Ethereum chart. You can see from the start of 2025, once we kind of lost the value area, price didn't want to really go back in, and it just acted as resistance until it wasn't. Once we've seen price coming in and it decided that it wanted to stay in there, we got to think that it's going to go to the magnet, which is the VWAP line, or straight through up here to the value area high. And look what price did. It chopped around for a little bit before zooming up to the magnet, chopped down here, use it as support. We lost a little bit here. That would have shaken a lot of people in the market before reclaiming it, using it as support, and just shot off straight through the value area high, our top guardrail, before finding us as support, and off it went. Now, if you had money on the sidelines and you were down here and you're seeing this price action on Ethereum, this would be a no-brainer. And now you can see back in the bear market when Solana was down in the $20 range, that it was just a perfect range where you could have been buying the lows and selling the highs for however long this went, right? Now, I'm not going to lie, you are going to get cases like this where you think you're just going to go off, but look at it did come back in, accepted back into the value area before coming straight back down to the bottom, coming up, rejecting off the top again, coming down to the VWAP, and then just launching from there. It makes your job really hard to invest or trade when you got a million different indicators on your screen. So why I don't recommend just going out and just trading off these levels alone, making sure you understand and learn what you're doing when it comes to seeing what you're seeing with price action on the screen. It's definitely a good start. And as you can see, I've just given you plenty of examples of how these levels work. This is the stuff they use on Wall Street. But the problem is with most of you guys is you guys are too impatient to be waiting for those right times to get in. And when those right times at those value area lows arise, you'll shit yourself thinking crypto's dead. Again, these levels aren't perfect, but they're definitely a cheat code to know when to get in and out of the market. Now, if you're watching this and thinking, well, that makes sense, but I still don't know the basics of investing in a crypto or trading into crypto, don't you worry, boo, I have your back. We built a beginner-friendly course. It's called Crypto Decoded. It's only $69. I'll put the link in the description as well. It covers everything from what Bitcoin is, how to use exchanges, and right up to how to place your first trade. And the reason it's not free and $69 is because when people pay something, they pay more attention. So make sure you go check that out after this video. So here's a simple investor playbook using these 3 lines. When the price starts moving to the value area higher levels, don't FOMO in. Just wait for better value. When price is approaching value area lows, that's when you want to think about, maybe I should start accumulating this asset. And when price is around that VWAP, that's when you want to maybe approach DCAing into an asset, depending where you are in the cycle. But if you watch the webinar below, the free one, you're going to learn more about the cycles there. Don't forget to zoom out and stay calm. This is where everyone fucks up. It's never about catching tops or catching bottoms. It's about avoiding those big mistakes, chasing the hype and panic selling the lows. So here's the big takeaway. Piss off those 10 indicators. With the VWAP and its guardrails, you get the map. Value area low, where patient buyers buy. VWAP, the fair value compass. The value area high where people might take profits or take a step back. This should be imprinted in your brain now. I'm not gonna keep going over the same thing. So this is just about investing smarter and not predicting every tick. And of course, if you found this helpful, please subscribe. Blow this bad boy up, and that'll fucking help me a lot. And if you want to make it in this game, don't forget those links in the description. Oh, and none of this is financial advice. Peace.